Welcome to another AriasWave update. Recapping on the XLM, giving you the daily update because it's fun and I love to do it. Okay, so what's going on here now? Let's have a quick look at the close small degree price action. Okay, I've just put the 1 in here so you can see the illustration of the 1 after we broke the start of E wave. Okay, so basically that means that this red line down here, right, that's critical support. So we can't go below this line. It would basically invalidate the view, right? So after we broke the start of E wave, that's confirmation right here. That's confirmation that we're moving higher. Okay. So this particular correction it has expanded to the upside. Well, it's still in the process of doing that. So it's already expanded to the upside, but whether it's a type 1 or 2 correction, we don't know yet because we haven't seen the E wave. Now, this is A, this is a B, this is a C. This doesn't look like a complete D. It looks like a 5-wave move. Therefore, I'm thinking that the D wave, because D waves tend to be breakout waves, we're going to see the B in brackets portion of the correction expand to the upside before it basically creates the C wave. Okay, so the correction started here and might end here or something like that. You know, I'm just giving you an idea roughly of what I believe is happening. The D wave, being a breakout wave, will tend to break out of the areas of importance, and in this case, that would be the magenta lines because they are the start of E waves. So if you can see here, there's an E wave. If you can see that this, I've labeled this one as an E wave, right? And if you go back a bit further, right, this was also an E wave, okay, as I mentioned before. So those are the 3 areas of importance, each one getting smaller. That's the biggest. That was a large, this is a medium, and this is a small, right? So these are the areas of importance, okay? And each E wave is creating new support. Okay, this is how it works with AriasWave, right? So that you got the first support down here that it created back in Feb. The next support was created down here in around the 23rd of April. And then if we're to use this view as correct using, I'll just zoom into the 15-minute, right? You can see the A, B, C, D, E. This is the new support. So I'll just move that to the start, to the end of wave E. Okay, that's the support now. Okay, this is how markets work. Whenever they create the complete correction of the previous move, then it's support. It becomes support, right? It cannot go below that. Otherwise, the view is invalidated. That's the beauty of AriasWave. I wanted to find some way of determining this, and that's when I spent 6 years creating AriasWave. So you've had wave 1, A, B, C. Now, like I mentioned before, we're in the process of D. Okay. Once we see that last E for what I've put here, actually, I should make this basically, yeah. So whenever you have an impulsive move, right? You have a 1, a 2, a 1, and a 2, and that's when it starts to get impulsive, more impulsive to the upside, right? And these things can move pretty quick when you get to that point. But understanding how you get to that point, that's what AriasWave is all about. Okay, so once we get that D wave happening, right? Just say, for example, the D wave ends here, right? That's all the price action of the D wave. Then you're going to get your E wave. right? Whether that comes back down to retest the break of that particular beginning of that E wave back, the large one, right? You'll get your E wave, right? So obviously you're going to know if I'm wrong, but I'm just explaining to you how I see the waves. Okay, and that'll be the end of wave 2, right? So you got 1, 2, 1, 2. And you'll notice that they will expand more to the upside. For example, wave 1 here, wave 2 there. You can see the angle is pretty flat. And then you're going to have top of wave 1 here, the angle will start to increase, right? And that's why wave 3s get sharper as they move along, because the angle starts to move up, okay? You start to get so much upward pressure, and it's a wave 3 that it just goes vertical. And when you zoom out to a higher time frame, right, it just looks like a straight line. But when you're looking at a small degree, this is actually what it looks like. This is what the beginning of these moves look like. Okay. Now, whether you like to believe it or not, well, do you know AriasWave? Well, if you don't, then you probably have no idea what I'm talking about. Okay. Now, in turn, that will then create a new magenta line. Okay. A new magenta line. And then once you break the top of that E wave, right, the end of that E wave then becomes new support, which is the latest support, which is the most, for the time would be the most important support. And once you break above that magenta line, now this becomes support. You can't go below this. So if you started off, say, for example, with a stop here, right, as soon as you create this E wave and you break above it, then your stop can move to this area, right? And then that's the proper way using AriasWave to move your stops, so you can lock in your profits, that type of thing. And that's actually a good idea when you're talking about impulsive moves, and especially wave 3s. You just get to lock in profits and you get to relax, right? You get to just enjoy the ride without the worries, right? That's if you margin trade, right? That's what I started off doing. But when I found cryptos, I just found that it's just much easier to just buy a whole bunch because they're not that expensive, and you know, patience. You will make money and then you can reinvest it later on. And if you're patient, patience is just the key here. Learning, knowledge, education, and patience, right? Good risk money management is good, but you get to own it as well. So just don't fall in love with the coin, okay? Because these are just patterns that will repeat over and over again. Don't fall in love with the coin. It's great to do your research. It's great to understand the utilities and all that, right? But at this point in time, I think it's just good to just watch your capital, okay? There will come a time where you should hold, and you should hold your favorite coins, whatever that is, right? But that time will come after the big crash that's happening, later this year, I believe, right? After this bull run's over to complete the C wave in brackets. Okay. So that's how I see that. There will come a point in time where we'll see that E wave complete. And then there's different techniques that you can use. Always use E waves, right? And you start to channel things. And when you see breaks above these channels, that indicates wave 3 price action is well and truly in progress. Or even if you don't want to go back that far, sorry, one sec. You could just use the wave 3. Yeah, so the end of this, yeah, well, that's basically the same thing. The only difference is you can just use the top of this green wave 1 instead of the blue one. And then a break of that magenta line, a break of that channel, I mean, it's just going to keep going, and you won't have to worry about it. You just have to be patient and wait for your, till you hit your target. In this case, where we're looking for $50. Now, obviously, that 92-cent area is just the all-time high. So clearly going to smash through that, no problem. I don't even see much else going on around there. Maybe potentially some, a bit of sideways correction around there, just reacting to that area. But typically, I think it'll just keep going. I don't think there's going to be much resistance encountered around that area, to be honest, because it'll be in the midst of a wave 3. And then when you zoom out of the whole thing, right, I mean, you could just see that these little waves that I've created in there, they just start to become looking really sharp, because it's going to happen. It's going to the momentum's going to start increasing, and the angle's just going to look more vertical, and that's what happens back here. I'm sure that if you would have gone to a small time frame on this area here, it wouldn't have looked so straight up, but because we've zoomed out of it, it looks pretty straight up, and that's what ends up happening after these moves start, and when they're well and truly on their way to the target. Okay, so as you know, all my targets are properly measured using these tactics, and so yeah, I mean, that's all nice and dandy for now, but let's just get real for a moment and go back into this area. You can see that there's some support there. It never quite hit that white line, which is good. That means that the D wave idea is still in play. If we break below that white line, I'd be surprised. Yeah, I'd have to reevaluate it at that point, but I really don't see it happening at this stage. I do just think that after creating 5 waves up, hitting that resistance from, I suppose, that's an area where people would have had their stops, especially once the market started to fall back here and pull back. People would have had their stop around there anyway at the previous high. And I suppose bearish people, once they saw this and they saw a pullback, they thought this might be going down, and then there was more of a pullback. Maybe they thought it was going down, and then eventually hit their stop and they got stopped out. So that's what happens when you call the top too early and you're bearish too quickly when you're in the midst of a bull run. Once all that resistance is broken, then yeah, you basically cannot stop the freight train from going where it's going, right? Now, all these patterns are documented on my program. If you're interested in learning exactly how it works, it's actually pretty cool. It's actually pretty fun, especially because you get to understand what you're looking at on the chart rather than using all sorts of other silly techniques like Elliott Wave, and especially indicators and oscillators and whatever other advice from your friends or colleagues that you're getting. It's probably not going to help you. And especially the news. Don't listen to the news, because really there's a lot more going on behind the scenes. It's called human behavior, and these are the fractal patterns of human behavior. That's what I follow. So hopefully you found this video interesting and informative. Thank you for watching.